and welcome to another episode of the Seeds of Hope podcast, Regenerative Agriculture with Eleanor Readiness. I'm your host, and this is episode number 5. On this podcast, join me on a journey across the regenerative agriculture ecosystem through conversations with farmers, founders, investors, and change makers as we learn how to create healthier soils, communities, and food. In this episode, we will finally explore a facet of regenerative agriculture that a lot of you have questions about: how to finance this transition. Today, I'm sitting down with Alex Godfrey, investment manager at Octopus Investments, to explore one investment strategy that leverages natural capital, subsidies, and diversification to create a return for the fund's investors and our ecosystems. Alex brings unique insights into how agroforestry and regenerative practices not only help combat climate change, but also open up exciting new revenue streams for farmers through carbon and biodiversity credits. This conversation is particularly timely as we see growing interest from institutional investors in natural capital, yet many are still trying to understand how to evaluate risk and take part in the maturing market. And yes, we'll also tackle the sometimes confusing world of carbon credits and what actually counts in building natural capital. Alex and I met at the Regenerative Agriculture Summit in Amsterdam this year. And before I get started, I'm excited to share that the Seeds of Hope podcast is the official podcast partner of the Regenerative Agriculture Summit series for their Chicago conference, happening next March 25th through 27th. This is the only summit that brings together leaders from both the food and textile industries to champion the shift towards regenerative agriculture. Join me and 500 more supply chain innovators for 3 days of discussions and actionable strategies to accelerate the regenerative journey. If this sounds exciting and you want to join me in Chicago next spring, you can use the code SOH for 10% off your conference registration. I hope to see you there. And now, without any further ado, let's get started with my conversation with Alex. Enjoy. Hi, Alex.
Hi, Elena. How are you?
I'm doing well as I can right now. How are you?
Really good, thank you.
Amazing.
Everything in the world seems unstable, and yet I still have confidence that we can bring back nature and solve climate change.
Yeah, confidence, hope, and courage to solve climate change even in unstable conditions. Those are quite valuable today, and I'm excited to dive into how some of the strategies that you're working on can help us there. So a little bit of context: Alex and I met at the Regenerative Agriculture Summit in Amsterdam a few months ago. And Alex, when we talked, I got really excited about the creativity with which the investment strategy you shared with me made regenerative agriculture a no-brainer for your investors. Alex has over 10 years of experience in finance and environmental consulting. You started your career in fixed income, and now you're focusing on natural capital and regeneration after an impactful experience in Bolivia that I'm curious to hear more about in this podcast. And now you're the investment director at Octopus Investments. So before we dive a little bit more about your personal story, which is quite inspiring, I want to ask a little fun question to kick us off. So as someone who has experience straddling both finance and the regenerative agriculture space, what do you think is one thing investors can learn from farmers?
Excellent question. There's a duplicity of things that investors can learn from farmers, because fundamentally farmers have multiple different business hats to run a farm. They're very complex, even in their most simplistic way, i.e. I am just a crop farmer, or I am just a livestock farmer, or I'm just a dairy farmer. You have to be a businessman, a marketer, an accountant, a handyman, an engineer. And that kind of diversity of skills on the ground at an asset level, I think, is one that is almost the polar opposite to an investor. We are specialists in a very siloed thing. And whilst we have a vast array of knowledge across our subjects that we invest in, it's nothing in comparison to what farmers have in their tool belt, quite literally. I think having straddled both roles, I've never actually farmed, I've worked on a mixed regenerative farm, but I definitely couldn't call myself a farmer, but I can now call myself an investor. I think one of my magic tricks that I've learned is my ability throughout my career to talk to these different stakeholder groups. I can sit in a room with a CEO or an investment committee and understand the language that they need to understand the propositions that we're offering them in regenerative agriculture, as well as I'm just as comfortable standing in a field with a farmer discussing exactly the same topic, but from a very different lens. And that is the same we see when you go to the NGO space and speak to them about impact farming. And I think that's really, really important in this complex, nuanced space where you have a range of different ideologies. We've never really put finance into nature before. It's always just been called charity or conservation capital. It's been a one-way flow. Money goes in and it doesn't come out.
Right.
And it's always been well-intentioned, and it's come from people who are very passionate about saving the animals, saving the planet. And I guess what's really exciting about my job is I'm in a position now where we're attempting to invest, not give, to help save nature. But to do that and do it at scale, to engage capital markets or private markets, we have to have a return, because our fiduciary responsibility to our investors is to provide a return. And that opens up a whole bag of questions, ideals, ideologies when you're going across these different stakeholder groups. Should we put a price on nature? I argue very much yes, because not having a price on nature, having it as an externality to a business and just disregarding it and taking it as a given that it's always there and always available, has really led us to some bad places. Whereas if we can put a price on nature and we can invest in rebuilding it, that should see nature restoration happening at scale. And when I say nature restoration, there's many different versions of that, whether it be protecting the rainforest, whether it be reforesting land that used to be forested through afforestation, or whether it be peatland restoration or blue, oceanic restoration, or in fact, what I get most excited about, because fundamentally it's the biggest terrestrial interface that we have, is farming. The amazing thing about the land use sector is that not only do we have to decarbonize it, it has the ability to sequester itself. We don't drive around in cars that sequester carbon. Our energy system, our heating in our homes, doesn't sequester carbon. They are industries that have to be decarbonized, and that journey is well on the way. But we can farm in a way that regenerates the land, sequesters carbon, increases biodiversity, and has a really positive effect on water, whether that be for drought or flood mitigation or water quality or quantity. All things kind of lead to regen. Now I think it's important to define exactly what regen is. And I appreciate I've just said a statement there that doesn't have an answer.
I've heard a lot of different definitions of regen and regenerative agriculture specifically. So I'm curious to hear yours or your attempt at defining it.
I stand behind the comment that isn't an official definition of regen, but I think if you look at the basic principles of minimum to low tillage disturbance of the soil, so, till as little as possible, cover crop, integrate livestock, rotationally grow crops, and increase diversity within the farm. If you can deploy those 5 or a number of those 5 practices, you're already on the continuum of moving away from conventional agriculture, which relies entirely on petrochemical fertilizers, GHG emissions, pesticides, fungicides, chemicals that will not end up doing the environment any good, or ourselves. In fact, we are seeing the results now coming out around glyphosate and its effect on people. And I'd really like to sort of start with the bases, but end up with the with the human end of the spectrum. Hopefully we've got enough time to cover it, but fundamentally the way that we manage nature and our land ends up with ourselves. We have chronic disease everywhere, and fundamentally that comes back to our food system.
Yeah.
Our food system comes back to nature, destroying nature. We can farm in a way that rebuilds nature, therefore rebuilds healthy soil, healthy plant, healthy animal, healthy human, healthy gut. I think that's the value chain that we really need to focus on as one of the big drivers.
So before we dive too deep into the value chain, because you just touched on a bunch of very important topics, from the toolbox the farmer has versus the investors, and being able to translate the same goals between stakeholders, to putting a price on nature and the potential of working on how we use land. But I would love to hear, you've acquired such a knowledge base on this topic from these different perspectives. So how did you, as someone who was in finance, get interested and aware of these externalities that maybe shouldn't be externalities, and the effects that they have on both our biodiversity, our health, and our greenhouse gases?
Yeah, sure. So I think maybe the best way to do that is describe the journey I've been on over the last 10 years in finance and 7 years in what we now call natural capital. And I'll try and weave in the human health and the planetary health bit on the way. I think that starts with, I couldn't quite understand when I was a broker how you'd go out for a lovely Michelin star meal and you would have, say, a chicken breast. You'd eat that chicken breast and then you would get a chicken breast the next day for lunch. And they were two completely different textures, tastes, feels. One you maybe felt pretty good from, one you maybe didn't. And part of that, of course, is the chef that's cooked it. We've got some of the best cooks in the world in London cooking amazing. But fundamentally, I think the first kind of foray into it was, this produce that has been acquired is better than the one that I'm finding in the supermarket. Why? So not all chickens are raised equally, not all carrots are grown equally, not all apples are grown equally. So that kind of started the juices flowing, but wasn't enough to push me to look at something different.
So really your personal experience of eating every single day, like we all do, but really paying attention to the quality and
Yeah.
variability.
And where it's coming from, how many miles has this food been flown, or how close is the farm? And I always found that kind of eating seasonally, eating locally, you can't get better produce. But then there was the question of, well, how has this been grown? As in, does this have things sprayed on it, or has this been grown organically? But yeah, it was an interest of mine. I met my wife in the Alps when I was on garden leave, and she was on ski instructor training, and she was doing her medical degree at King's College in London. And I'd just taken a job in to run a trading desk in Germany. That's where the real turning point started. Was I would come home back to London and say, what have you done with your week? And she would say, well, I've met this person and I saved their life, or I've learned about this. And I was just pushing money around on the screen, and that impact scratch really started for me. I lasted probably another 4 years before my wife said, you are totally burnt out on your board, go and find something you're passionate about. And climate change was kind of climbing up the agenda for me. What do you do about it? Is there anything you do about it? In my finance career, I traded one of the first green bonds that ever came to market from ABN AMRO. So sort of kind of got a flavor, but still felt very far away from any sort of impact. So she said, Alex, go and visit my uncle. I said, okay, where does your uncle live? She said, the Bolivian Amazon. And Amy's uncle is a guy called James Johnson. He is an amazing person and is one of the sort of thought leaders that's been doing this way longer than any of us that are now seeing the opportunity. But he said, and he's worked all over Latin America, putting in windbreaks, because as Latin America went through their green revolution and tore out every tree and hedge and everything in between to grow as much yield crop as possible, he was saying, hang on, if you don't put windbreaks in, i.e. trees, you're going to lose all of your soil as the wind runs off the Andes and into the Atlantic. So you can go on Google Maps and you can see all over Latin America where Jim's planted. And I was lucky enough to spend a good amount of time on a large-scale reforestation project that he had bought many years ago.
So were you there hands-on planting trees in the field? What were you doing there?
So I was very much in learn mode. I got lucky enough that I did it with someone that not only has multiple 50-year-old natural capital projects, so I've seen these things close to their developed stage, but then really got a deep dive into how to farm with nature and how to farm in complex systems. So the forest that I was learning to farm in, it was a forest, and I was like, wait, but this isn't agriculture. Agriculture is a single thing that you grow in a field, or it's a beef lot. And he was like, no, that's industrial farming.
So was it a natural forest or did he grow it?
So it was reforested. It was reforested from deforested land, which was basically desertified, and he bought for basically pennies on the dollar, because what do you do with desertified land? And he used regenerative techniques to bring back this forest. And started growing bananas, coffee, baruca nuts, livestock, multiple different other agricultural offtakes, and employed a lot of people to do so. And I was like, this is really interesting. From an investment perspective, what this looks like from a high level is portfolio theory on land. You're not rolling the dice on one stock, i.e. corn or wheat or beef or chicken or sheep. You've got a portfolio of 12 different products here that you take out of the farm gate, and you have short, medium, and long-term cash flows.
Diversification.
Diversification, just as we have in investing. It just really hit a note with me, and I was like, I think this is the future. And then through spending more time there, you then meet the herd of Criollo cattle that are bred with Angus, so they have a really nice meat to them, but they're heat resilient. And then you find out that these cattle have some of the best daily live weight gains of any cattle in the area, because they're raised in a forest which is 10 degrees cooler than being out in the blazing sun. They have no inputs, no corn, no soy. They eat all of the fodder on the forest floor, so they don't cost much to produce. They have the best daily live weight gains. And the coolest thing about them is, when I was in Bolivia in 2018 or 2019, I forget now, it's when there were massive forest fires and we didn't burn 1 inch. Why? Because the cattle ate the combustible material that was on the forest floor. So I was like, this thing is economically resilient, this model. It's ecologically resilient, and it's climate resilient. Oh my God, this is amazing. Why is everyone not doing this? So I went home.
That's a huge risk to be mitigated fire risk.
Massively. As climate change means that the climate becomes more unstable and we have greater flooding events and forest fires, fires in general. Climate mitigation in agriculture is huge. So I guess I didn't know the term yet, but that was my first example of regenerative agriculture. The exact typology would probably be syntropic agroforestry at quite a complex level. That, I think, is the gold standard, and that is what I think we need to be moving global agriculture towards, this diversified, climate resilient approach.
So what is the difference between syntropic agriculture and regenerative agriculture?
So I think regenerative agriculture is a catch-all for the continuum of nature-positive land use. What I mean by that is, because there is no definition, if I am a corn farmer in Iowa and I reduce my pesticides, fungicides, synthetic fertilizer by 30% and do some cover cropping, I'm a regen farmer.
So based on the practices.
Yeah, the practices. But that's pretty close to industrial still. Syntropic agroforestry is probably the polar opposite to that. That's the end of the scale. That's like the utopia, the mecca of where you want to get to. We are years away from that, of developing syntropic agroforestry in Iowa, and I understand that. So it's about understanding where on the transition complexity scale farming can get to from a standpoint of industrial farming. At what point can we integrate trees and have agroforestry, and what does that agroforestry system look like?
Yeah.
What stacks or revenue lines can we apply to large-scale conventional farms to transition them to regen? What do the economics look like in the short, medium, and long term? And how do we get farmers to transition that way, because the business is fundamentally de-risked? I guess what gives me the confidence in this market is I've seen the end product. It's now working back to today's product. and where the risks and opportunities lie.
So you just mentioned different revenue streams, long, medium, and short-term income streams for farmers, depending on their model. Is this something that you look at in your current role?
So I'll continue the journey and it will end up with how we look at our strategy. I went back into academia. I went and did a master's at SOAS University, and I did climate and energy policy because I wanted to understand how policy affects markets and how we move to this new world of nature positivity and net zero. And my conclusion from that master's was amazing cohort, great university. Policy is the biggest hammer in the toolbox by far. It's way bigger than private markets. You can change things with a stroke of a pen. And I guess our best example of that action through policy is COVID and the sort of turnaround that was on almost on a penny. That's the kind of response we need for climate change. However, because policy is so complex, convoluted and captured, nothing moves fast in policy. It's too complicated to be the overall solution. It will be a combination of policy and private markets. So I did my dissertation thesis on agroforestry at scale. Can we grow horizontally and vertically, i.e. two things in a field rather than one? And what does the economic and ecological outcomes look like? And I'm pleased to say they are better than monocrop. So I then co-founded a startup called New Foundation Farms with an amazing team. The problem we were trying to solve for was farm economics. So we attempted to raise capital from institutional investors to invest in a minimum of 1,000-acre farm in the UK, up to 60,000 acres over 10 years. That would be 1.5 billion on today's land prices, that an institution with long-term capital can park into land. And then there was a capital expenditure of circa 400 million on top of that to build out these 60,000 hectares to essentially what I had seen in the Bolivian Amazon, which was agroforestry. Can we take 20 different things out of the farm gate in a closed loop system? And what do those economics look like? And we had a big team of about 8 of us at the time that came from finance, farming, research, policy, and everything in between to try and understand stacking all these different economical income streams and what that looked like.
And what were some of the income streams from that project?
Sure. So really broadly, if you think 20 different products, 5 different trees, timber, fruit, nut. You've got all your vegetables and fruits. You've got rotationally grazed livestock.
So it was mostly the production of the land that could be sold. Did you also include carbon credits or rise in property value in that proposition to your investors?
No. There was definitely 2 secret sources. The exam question was, well, what does the farm of the future look like and how complex can we make it? Which was one of our downfalls because we made it too complex and investors really struggled to get their head around it. What investors really were attracted to, though, and where we nearly raised 20 million to buy our first farm in conjunction with Oxford University, was the high integrity carbon credits that we could spit out of the top of a profitable farming system. And that's where we really captured the imagination of farmers, not for the whizzy farm, but for the natural capital, for the water, biodiversity and carbon benefits that we could show. And we did all of the due diligence to receive funding to do so and got through that, which was really onerous, trying to explain to a Singaporean REIT what syntropic agroforestry looks like in the UK. But we got there in the end. But what they really wanted was the carbon credits. And that, again, lit a bulb in my head of natural capital is the thing that the climate finance is looking for, not so much just the basic farming. If you could combine both, then I think you've got a goal there.
So right now you're at Octopus Investments and you're focused on natural capital as one of your main areas. Is that right?
Yeah. So there was one more jump across the lily pad before I ended up here at Octopus, and that was going to Savills. Savills are a global consultancy, property agency. Many of your listeners will know them. Where their business started was UK land management. And out of the 27 million acres that makes up the UK's agricultural footprint, they manage 4.5 million acres. They are the absolute market leaders in it. But they do everything in a conventional way. All of their forestry, all of their farming is industrial. And I was brought in to head up a natural capital team with a business partner called John Dearsley. And the exam question was, how can we help clients understand the risks and opportunities from engaging within natural capital? vis-a-vis nature positive farming. And I really enjoyed my time there, turning a big ship like that, a small amount of degrees and towards regenerative farming was a real career highlight today. And I loved the team. And I lasted 2 years before Octopus approached me and said, we love what you're doing. We love how you look at land. And I guess this is where the start of the strategy story comes in. But the message I was giving clients at Savills was farming on its own, whether it's regenerative or whether it is conventional, the economics don't work. From a global perspective and a GHG perspective, it's the third biggest. In the UK, it makes up a third of emissions and 1% of GDP. And you speak to any farmer, whether they're farming regeneratively or conventionally, it's really tight. It's a really hard industry. The margins are too tight. Now, regen farming, you can farm at a higher gross margin because you're not farming with all the inputs, but you will see a yield drop and you will see a penalty. Natural capital, i.e. carbon credits and environmental subsidies, can help bridge that gap, but it still ends up as a really marginal business. So in my research of driving around the UK for a good 6 months, talking to estate owners, and estates are, for your US listeners, are ranches, large tracts of land, thousands and thousands of acres. And farms are probably a couple of thousand acres. So that's differentiate. But what I saw on the larger scale ranches or estates were a high level of diversification. And it might not have been in their agricultural piece, but they had homes buildings, they had tourist centres, they had woodlands, they had shoots, they had renewable energy build out. They had this diversified portfolio effect that I had seen and sort of got behind. It wasn't always nature and climate positive. They may be building distribution sheds for Amazon, but they were diversifying the business and they were having more income. And often you were seeing the farming was being supported by the other incomes. So I think my message to farmers small and farmers large is diversify your income stream and create short, medium and long-term cash flows. In reality, though, what does that look like? Because most farmers are up against the wall in terms of their economics because farming is so marginal. And I think this is where, before I get to the Octopus strategy and my piece there, where transition finance comes in and the banks really need to start stepping in and understanding the need to transition to a lower input, higher gross margin business. The farmers can't do that on their own. They have to do that with the help of capital and expertise, much like they've had for conventional farming, but for environmental farming. It's bridging that gap. In the UK, where I am, we're going through a really interesting transitionary period because we Brexited a few years ago. The UK government has pulled our basic payment schemes for subsidies for farmers. So no longer do you just get subsidies for owning land as a farmer. The subsidies are now all angled towards environmental land management or sustainable farming, which has meant farmers are really starting to grab the bull by the horns and move towards the money, essentially, because no longer will you get subsidies to farm in an industrial way, which is really, really cool. And I think Europe is really watching the UK as a sort of canary in the coal mine of how they can use policy and subsidies to push more environmental farming and what that does to farm economics. We are in the foothills of that transition, so let's see how it plays out, but I hope a positive story.
Yeah, that is really exciting. I first heard about that in our conversation in Amsterdam, really. So one thing that is the big question mark in my mind is, so we've talked about how difficult farming is from an economic perspective and the tight margins that farmers are working with. So how do you make a business like that investable to institutional investors?
Yeah, sure. Before I do that, I think we should also touch on the R word, risk, and where risk currently sits in the US and Europe, as we just identified. The risk probably sits with the farmer who's transitioning to regen because he's moving away from that subsidy system where he gets paid. The other side of the risk question, though, is, of course, climate change and what that's actually doing to growers' land. And if you're farming conventionally, arguably, whilst there's subsidies there, you're safe. But if they go, your land is inherently at risk from flooding, from drought, from the fact that you only grow one thing and one thing only, or you might do a corn and soy rotation. That is a really, really risky business that relies on subsidies. And if those subsidies pull, you're in a real trouble. Whereas the risk of transitioning to regen, as we're seeing in the UK, is not only the subsidies now backstopping you, your asset, the land that you farm, is becoming more resilient. Every 1% of organic matter that you can increase, you can hold 40,000 litres in every hectare. That is a drought mitigation measure for this changing climate. If you can hold water on farm longer, when floods happen, there may be an insurance company that says, can we pay you to keep farming in this way, rather than letting the water discharge quickly off your land and flooding the house that we've insured down the road? That's a natural capital payment.
Have you seen that happen?
So we are in the foothills of that. There are some examples in the UK. I think the Wyre Valley River Restoration Project is the example on the Green Finance Institute website of companies paying farmers to hold water uphill or upstream and slow the flow. But we really see that as a benefit or a market to tap into as the weather gets worse and insurance companies look more at nature-based solutions. So I think that's just a little tidbit into water, but let's move to Octopus and how we look at holistic land management investment strategy. We've labelled the fund or the strategy as a natural capital strategy, and that means it focuses on 4 pillars: carbon, biodiversity, water, and people. Because we think by investing in rural areas, we can increase social impact hugely, despite the fact we're essentially an environmental scheme. So carbon, biodiversity, and water is how we generate some of our IRR. Carbon is, of course, the Trojan horse to natural capital. The carbon markets have not seen the best start to their lives. In fact, they've been somewhat of a market failure. But we really look at the core fundamentals of carbon credits and their need in the race to get to net zero. And fundamentally, nobody, and I repeat, nobody gets to net zero without high integrity carbon credits. So whilst there's been a market failure and whilst the Global South was perhaps not the best place to create carbon projects because the climate risk, the geographical risk, the policy risk, the lands right risk, almost every risk profile you look at when you look at Global South projects is the wrong end of the scale for a nascent market to be built that sells quality credits to corporations that are making fiduciary claims against their net zero policy. We really recognise that this carbon market has to be there, but it has to be changed and has to be done elsewhere. So our story starts...
So just to clarify then, when you think about natural capital, is it the carbon credits, biodiversity credits, water credits? Is that what comprises natural capital, or how would you define it?
That's a really good point. Again, much like regenerative agriculture, there is no official definition of natural capital, but we've done a lot of searching and a lot of research, and we think simply applying an economic lens to the world's natural assets is the best way to define natural capital. If you are putting an economic lens on the world's natural resources, you're putting numbers on the board. You can quite literally put nature into a balance sheet, theoretical or actual. The next sentence after that is, what we're investing in, does it make that natural capital number go up? Does it make it go down? Or does it sustain it?
And is that the price of the credit in the market, or is that based on some kind of natural outcomes like soil organic matter or water purity or biodiversity?
Exactly. I don't think we're at the credit stage yet in terms of how we're framing this. We're at, what is the outcome? What is the uplift? Does this investment uplift biodiversity? Does it increase water holding capacity in soil and water quality? Does it sequester carbon into the ground that was in the atmosphere? So when you're looking at natural capital investment, you need those outcomes to be positive. If those outcomes are positive, you can then start to create credits from them. That has a monetary value. And that monetary value is derived from companies that want to reach net zero or nature positivity under 30 by 30. So I guess let's drill into carbon. Carbon is globally one credit is 1 metric ton of CO2e. However, not all credits are created equally. We have two chapters. Chapter 1 is avoidance, and that is where the carbon markets really started. That's I will promise not to cut down this forest. I will promise to use this cook stove, and from that I've saved 1 ton of CO2e going into the atmosphere. That is quite nebulous, and that's the credits that have been sold to date, and they're the ones that are representing the negative headlines around carbon emissions. And as I touched on earlier, they've been done in parts of the world that are in desperate need of climate finance, but I don't think they're the right mechanism to then sell to a corporation that then makes a fiduciary report on what they've done. We believe an integral carbon market is a carbon removal credit. That's a land action that results in a credit that removes 1 ton of atmospheric carbon and locks it in the ground. There's two different ways you can do that. You can do it by using nature, or you can do it mechanically through something called direct air capture. Direct air capture will definitely be needed, but it is very much in its R&D phase. The credits are absurdly expensive and it hasn't scaled. We think the best way to create value in natural capital or natural value from credits is investing in nature. Because if you invest in sequestering carbon through tree planting, afforestation, peatland restoration, blue carbon, you can generate an IRR for investors and a massive amount of impact on biodiversity, water, and society. Which is why when we buy estates or ranches, we take that first look of how can we regenerate this land through positive land actions that will create high integrity nature-based carbon removal credits or biodiversity credits or water credits. Now, water credits haven't come to the fore yet, as we talked about. It's not a commodity-based market yet like carbon is, and biodiversity. Somewhere on the brink, we have the world's first compliance biodiversity market called BNG, Biodiversity Net Gain in the UK. Because we own the asset, we buy the land. We've invested in one of the world's oldest asset classes. It's very knowable, it's very diligenceable. UK land performs really, really well. Second investment decision to buying land is what can we do from a nature and climate positive land use play, whether it be regenerative farming, whether it be tree planting, peatland restoration, blue carbon or water management. We then also look at what else we can do to the estate to add value to it. So at Octopus Investments, two of our core investment fields that we play in are renewable energy and low carbon homes. So on that land, not only have we bought it, it's the world's oldest asset class, we've blended with the world's newest asset class, which is natural capital. But in between, we've built out homes and renewable energy, green energy. And what that does to that estate or ranch is really make it pay. Rather than it just being a farm, we still produce nature positive food, but we also have stacked income from property rentals. That could be social housing, it could be ecotourism, renewable energy, and natural capital. So we blend different asset classes, much like a portfolio effect and a portfolio, but at an asset level. And what that does is it gives us some really low risk, robust returns from the land, the energy, and the homes, and some really interesting potential returns from the natural capital as this market develops. So essentially what that allows us to do is take the institutional investors, the patient capital, the pension funds, the endowments, a strategy that allows you to enter natural capital at scale in a safe way because your downside risk is mitigated by land, homes, and energy.
Yeah, so that was the creative approach I mentioned in my intro. And I remember you also mentioning that investors are just much more familiar with investing in real estate, clean energy. So in addition to the actual risk on paper, there's also that investing in something new that might feel riskier than it is. So I'm curious, what have you found from investors that have been with you for a while now? Do they become more open, or is the idea to eventually move to regenerating pieces of land more through regenerative agriculture and decreasing the renewables and green buildings portions of it? Or are you planning to keep that portfolio the same?
That's a really good question, Elena. We need to see how the market evolves. Fundamentally, I believe that homes, energy, food production and fibre production in a nature and climate positive way should be every ranch, every estate, every farm around the world. because farming on its own just doesn't stack up. From a return perspective, though, if I don't have to do the renewables and the energy, and I can really focus on maximizing rebuilding ecosystems, because that's the bit that's desperately needed because we're in a climate and biodiversity crisis. If those prices get to the point and the market gets to a stability point where we can really focus on that and take it to the global south again, when those markets are more established, I think it'd be pretty cool to have standalone natural capital funds. But the fact of the matter is today, they're just not that viable. We need the market to grow up, which is why we've taken the hybrid approach.
Yeah, that makes sense. And I'm curious to hear, what do you think are one of the challenges for the natural capital market to grow up? What do you think stands in the way for it to reach maturity to where you could have 100% or a higher percentage of natural capital-based investment on those lands?
Probably three takeaways. The firstly is because the carbon markets, the voluntary carbon markets, have had such a bumpy start, every room you're walking in to talk about carbon credits starts with a lesson or an adverse conversation around, do you realize that no one gets to net zero without carbon credits? We recognize that they've been done badly, but they have to be there. So what does good look like? Rather than, okay, great, tell us how you make the best carbon credits in the world. That's point one. Point two is there are quite literally trillions of dollars that subsidize both fossil fuels and nature negative food production around the world. That has to change. We're seeing it in the UK, and I think, as I said, Europe's watching. That has to change for, that policy underpinning to drive markets has to change. And thirdly, time. This is a new way of managing the world that we live in. We are in a period of transition, and we have transitioned from the energy transition, transport transition. We are now on the third biggest issue, which is land management. And that takes time. Like regenerating land takes time. Nature coming back takes time. It feels like sometimes we don't have time because our planet is quite literally burning. But if we can implement these techniques across our globe, we can bring the global warming back down below 1.5 degrees and regain that stable climate and nature that we desperately need.
Yeah. And I've heard this in a few conversations about the time horizon and how time moves when you work with nature, which is cyclical. When in agriculture, you have growing seasons that are much different than if you were to invest in a B2B SaaS company where things can be accelerated if you manage it well and have investment. So I'm always interested in how those dynamics maybe might even change the way that we look at investment and our expectations for return, both financially and lowering our degrees of warming. But I also want to quickly touch on you mentioning subsidies and UK's progress. And in my research, I was reading about the Environmental Land Management Scheme, ELMS, and UK transitioning to outcome-based payments. So I'm curious because that seems like quite a lot of innovation on the policy level, which, as you said, can be slow and arduous sometimes. So I'd love to hear your perspective about those subsidies and how they're structured and what you think about how they can support the transition.
Yeah, sure. I mean, innovation and policy don't often go hand in hand, but frankly, the UK government, especially this new government, who's just pushed it even further, they've ripped the basic payment scheme subsidies away and are really pushing the Sustainable Farming Initiative as the transitionary subsidy payments that will lead into the Environmental Land Management scheme. That is essentially payments for nature-friendly farming. We are literally seeing it at scale in front of our eyes, which is a fund we're really excited as a strategy. We're really excited about because it means we're playing into tailwinds from a subsidy and policy perspective. And for the farmer on the ground, it means he's really going to have to take stock of where the money comes from for his farming business and should hopefully lead to a faster regen transition.
Yeah. And I'm curious to hear, just to zoom out and close out this conversation about the role of investment. So subsidies play a role in the transition. what role do you think private investment plays in the regenerative agriculture transition?
So I would divide this out into debt and equity. Debt comes from the banks. Farmers currently hold a lot of debt. I don't know if they need more debt. If they do, it needs to be more flexible debt. And a nod here goes to Mad Capital in the US with their transition finance to organic. I think what they're doing is amazing. Have a look at it. The other side of the coin is our side. It's equity. We come in, we buy land. We get young farmers on the ground that are keen, that align with our impact goals of sequestering carbon, regrowing biodiversity, nutrient-dense food, and water management. And we give them the platform to farm in a way that helps nature and, see some of that economic benefit. They're the two ways that I think we can help farmers.
I love that. I love being solution focused and putting money to work where it's most needed. So as we close out our conversation, I know we could dive into a lot more of these facets. Is there anything else you want to share with the audience?
Yeah. My closing point would be those who farm and those who invest in farming, really consider your risk profile of sticking rather than twisting.
What do you mean by that?
So there's a number of investors investing in nature negative systems and kind of just sitting and clipping the coupon. But we are seeing more and more adverse weather every day, and that is going to pose a systemic risk to the businesses they are invested in, arguably larger than transitioning to regenerative systems.
All right, so risk as the driving force for the transition, but also something incredibly important for the farmer to keep an eye on. Well, thank you so much, Alex, for sharing your experience, your journey, and some interesting innovations that are happening on the finance side of regenerative agriculture. And I look forward to hearing more about what happens with natural capital, with carbon markets. So thanks for your time.
Elena, thank you so much for having me.
Thank you for listening to Seeds of Hope. Our wonderful theme music is composed by Dane Myers. If you enjoyed the show, please follow us on Spotify, Apple Podcasts, or YouTube so you never miss an episode. Share it with a friend who might find it inspiring. And if you're loving the podcast, we'd be grateful if you could leave a rating and review on Spotify, YouTube, or Apple Podcasts. It really helps others discover us. See you next time, and thanks again.